All right, I'm gonna do a update for Overstock for the week ending 2/18. Yesterday, we had a 6% down move in Overstock, and the overall market was still really crappy if you're long, all because of the Russia-Ukraine war narrative that is going on right now. The sell algos are on full force. So I want to go over two potential scenarios going into earnings. We have earnings on Wednesday. I think Wednesday morning, actually. So I originally had bought into the stock. Actually, I bought in down here. I sold around 52 bucks, expecting the top to be around in this area. And then I bought back in at 43 to 45 on the ABC pullback to the 61 fib. Assuming this is a 1 move, 2 move, and then 3, we go to $64. However, this pullback went farther than I wanted for a second wave pullback, almost to the very beginning. And that really makes me consider that this is actually a fourth wave and we're starting a fifth wave. So two ways this could play out. I think that we bounce either way on Tuesday. We can either bounce big, and if we bounce above, let's see, if we bounce above 44.43, it's the start of an impulse move in my opinion. Even probably somewhere above 43 probably as well, because this right here went past the 1.61 fib, which usually means that a fourth wave can only go to the 0.23, which is 41.44. So if we get a weak bounce to 41.44, then let's say this is the fourth wave. Whoops. So 41.40 is a fourth wave. Then I'm looking at this being a 5-wave move for the overall fifth wave. And I am looking for this to fall to mid 30s all the way down to 33.60 and possibly all the way down to about 32 bucks. There's also a gap to fill around 30 bucks. That's potential too for the fifth wave. Back from 2020 on the run up, we still have not filled that gap. That's another possibility. The way I'm personally going to play this is, since I bought at 43 to 45, my original strategy was to put a stop loss below 38.18. But since I don't think there's that much downside, and since Overstock is already extremely undervalued in my opinion fundamentally, they have a new business with a T0 platform that's going to bring in additional huge revenue. I don't really want to get stopped out here and take the risk that this just falls to $35 and then the next day it bounces to, you know, 45, 50 and I'm out and I lost money and I'm not in still. So I know I was wrong on the play potentially, but I think it's actually going to be more beneficial for me personally to just ride this out and then wait for the next move higher. I think we'll see 60 in the next couple of months, in my opinion. So personally, I was using a stop loss on Friday, but that is not what my game plan is after looking at the chart. If we do bounce to 41.50, like I said, what I will be doing though is selling covered calls and buying puts to hedge. And if we get a bigger bounce, I'll still be selling covered calls, but I probably won't be buying puts. And I know that sounds like counterintuitive, but if we get a bigger bounce, I think we're starting a impulse first wave. If we barely bounce, we're going to see the fifth wave down. So that's the way I'm going to play it. I'm not selling them. I'm buying puts to hedge and covered calls to hedge. And just to mention too, there is a 19% expected move on the stock. So let's say we do get a fourth wave to 41.40. So we can move about $8, and that's exactly what I said, 33 bucks, all the way up to 48. So if you want to be very smart about it, if we're getting a 19% expected move, and we only bounce to 41.44, you can sell covered calls at $50, and that's exactly what I'm going to be doing because I had bought them at 45. I'll be selling covered calls at 50. And then I will be buying puts for the fifth wave. And if we do get that fifth wave and it goes down to $33 to $35, not only will I make money on my covered calls and my puts, but then I can also buy more shares at that price and bring my average down. And then after that, we should see a first wave move higher. So profit three different ways. You get put money, you get covered call money, and then you get shares lower and you wait for the bounce. So yeah, I pretty much just talked myself in. I'm not going to sell even if we break the 38 level. Tell me below what your plans are for earnings. This can be a long-term play for a lot of people too. It's sold off a lot in the last 3 or 4 months to a point where it's so undervalued that you could hold this for 5 years and make a lot of money. So that's kind of where I got to too. I was just like, what are the advantages of doing a stop loss here where we're only going to go down potentially another $4 or $5 and then we're going to bounce back to 50 in no time. So Elliott wave, I normally do that on my swing trading, but this time is an exception. And I think that you should be wary about using a stop loss here as well because I don't think there's that much downside below here. So let me know what you think in the comments. Like and make sure you subscribe, and I will go over this on Tuesday after the market to let you know my thoughts are going into earnings again. So I will talk to you here in the next video.